Mark, you're being recorded, and so we can start as soon as you feel like you're ready. I'm going to keep trying on Gil. Gil, I see you there, but I just, for some reason, it's not letting him be promoted.
What about Todd? I don't see him either.
I was going to say, do we?
I don't see Todd on. Todd in.
Yeah, I don't see him. Is Rorman the only one? Well, Michael.
Nope. Michael's here.
So
Scott's here.
Michael.
So we
Hey,
need
Michael.
to-
Somebody say something to me. I'm sorry.
I said hi, Michael. It's Rusty.
Oh, hey, Rusty. How you doing?
Good.
Hey, Stephanie, can you email Gil a call-in number?
I
Maybe.
I
we
can.
could- Oh, wait. Looks
There
like
he is.
He's in.
there he is. Okay, good. Never mind.
Hey guys, this is Gil. Can you hear me?
Yes.
Dan.
Hi,
Okay.
Gil.
Hi guys. Okay, I'm on.
What I've had to do is I've left Gil an attendee, but I've made him an attendee that can be heard. So we won't see him on the screen, but he should be able to speak and participate otherwise.
So
Thank
we
you.
are official with the quorum.
Yes, sir.
We have 4.
All right. Good morning. The June 28, 2021 School Land Board meeting will come to order. Need to get a few housekeeping things out of the way here quickly. Pursuant to section 31.015 of the Texas Natural Resources Code, I will be chairing this meeting in the commissioner's absence as chief clerk of the General Land Office, as the commissioner is away on state business. Should the commissioner return prior to the conclusion of this meeting, I will relinquish the chair. Secondly, pursuant to the governor's executive order to avoid gatherings of more than 10 and the governor's March 16, 2020 suspension of certain provisions of the Texas Open Meetings Act, the June 28, 2021 meeting of the School Land Board is being held today by video conference call as authorized under the Texas Government Code section 551.125. Access to the meeting by members of the public was published in advance in the Texas Register in accordance with the Texas Open Meetings Act. Any member of the public who wishes to address the School Land Board should indicate so at the start of the meeting or during any public comment period. So are we good, Corey, with visitors?
Yes, sir. I've not seen any request to speak or anything yet. I'll let you know if we get one.
Okay, I appreciate it. So we will move on directly to the agenda. The first item is a motion to approve the minutes of the May 18, 2021 School Land Board meeting.
This is
Assuming
Gil. I motion.
A second, Michael.
easy enough, motion to approve, motion made, seconded, carries unanimously to approve the minutes of the May 18, 2021 School Land Board meeting. Next item on the agenda is approval of the consent agenda. There are no questions.
Are you looking for a motion?
Looking for a motion.
Motion.
I'll second, Michael.
Thank you. Motion is made, seconded, and carries unanimously to approve the consent agenda as posted. Next item on the agenda is docket item number 3.
Good morning, Jeff Gordon, GLO General Counsel. This docket item involves consideration of possible action on proposed SLB de minimis sales policy. It arises from a discussion we had at the last meeting by Todd Williams, and he asked the staff to consider the possibility of preparing a policy for what we call de minimis sales, things that normally are pretty straightforward, such as tax foreclosures, vacancies, things like that. And so based on that, I asked Nick Orman to draft a policy for your consideration. And Nick, if you could lay that out for the board, please.
Sure. Good morning, Nick Orman, Office of General Counsel. As Jeff said, item 3 is the de minimis sales policy consideration by the board. So this policy, if adopted, would allow de minimis sales to be approved by the board as consent items rather than individually considered. unless a board member or GLO staff determines that it merits individual consideration. As you know, every meeting we have various sales.
I'm hearing an objection.
Just
Sorry
never
about that.
know with Zoom meetings.
Yeah, my apologies. The joys of working from home.
Yeah.
But as I was saying, there are various sales, tax foreclosures, vacancies, small sovereign sales that are nominal amount with zero special circumstances. And the board will often spend a lot of time hearing about these small matters getting bogged down. So as a result, we thought it prudent, and following up on Todd's recommendation from last meeting, to set that de minimis threshold. So as it's currently drafted, the de minimis threshold, in order to qualify as a de minimis sale, it must be at or above appraised value, without the expectation of associated litigation, that will close on or before 120 days from approval by the board, with a standard reservation of oil, gas, and other minerals, and for a total purchase price not to exceed $75,000. So this dollar amount is really a placeholder. We wanted board's input on that, whether you think it's justifiably higher or lower. But the only other caveat is that if there's a material change to the transaction, meaning a change that would cause the sale to no longer conform to the definition, then we'd be required to come back to the board. So that way there's no chance of a bait and switch type situation. But it's pretty straightforward, as Jeff said, but going back to that dollar amount, we certainly welcome any thoughts or input about what number y'all would like to see as far as meriting board's individual consideration.
Nick or Jeff, this is Michael. I was just curious about the 75,000. I'm sure there was some thought behind that. So how did y'all come up with that number?
Sure. I think it was just from past experience. I think we had 100,000 at one point, and we were kind of going back and forth. I think asset management staff suggested 100,000. But ultimately we decided that we would just take it to y'all. So it really truly is just a placeholder. Just any amount that y'all think you actually want to see the granular detail about.
And we were trying to, and maybe Brian or David wants to speak on this, but we were trying to make sure it would cover the things that really truly are kind of the de minimis things, the tax foreclosures, things like that. I don't know if it's going to get the entire universe, but we felt like around 75 is pretty close to kind of cover the majority of that.
Go ahead, Michael.
I'll turn it over to you, Todd.
I was just going to ask the question, if you went back the last 2 or 3 years and just looked at the value of everything that you brought to the board, how many transactions would be 75,000 or less? Are we talking we're eliminating 20% of the workload, 10%, 50%?
I think it varies. I'm happy to get that number over the past year. And certainly we have at least one every board meeting. I think we have 2 that would qualify under this policy that are on today's agenda. It's really a lot of the tax foreclosures, small sovereign sales stuff that are, residential lots in the middle of small towns and things we didn't know we had often until they were brought to our attention. But again, I'll be happy to get the number of how many we've had in the past year and follow up with you.
And so,
Go ahead.
if we adopt this, we would still have the opportunity to look at them. It would just be a part of the consent agenda. Correct?
Correct.
Okay.
And if you would still see the same information as far as the memos. And so if something caught your attention, you wanted to sort of pull from the consent and consider it as an individual item, that would be, you would be able to do that.
Okay.
I think the way it's laid out, if say 75,000 is the threshold we go with, say there's a $50,000 sale, but it has something a little abnormal or unusual that kind of falls on standard guidelines, that would still be brought before the board, correct?
Correct. It would be either the board member or staff determination that there's some circumstances that merit the board's attention as an individual item instead of consent.
Yeah, and remember, everything is going to be brought before the board by statute. We need to, because they're conveyances. But The idea here is that we put it on the consent agenda, which generally is pretty standard stuff, as you all know, every board meeting. So it would still be something that would be brought to the board. It's not, you're not delegating it to staff to make the decision, but it's not going to be something that will require an executive session in that. The idea is that this is pretty straightforward. It meets the policy. And of course, if you want to pull it out, we can always pull it out. And Brian, do you have any thoughts on to Todd's question about how much this would probably switch to convert to the consent agenda based on your experience?
I mean, we could get an exact number, but my thought is I think on average, you'll get like one a month where we have like some sort of tax foreclosure. They're usually around typically less than 100,000 in that range. So I would say at least one or two a month if I had to guess, but we could get an exact
We
number.
typically have what, 6 to 10 things on executive committee per month?
Yeah, depends. The rest of these things are always at executive, and then of course, either tax foreclosure, anything that's a conveyance is going to be in there. So this is not going to eliminate everything, of course, but it'll take out some of those kind of smaller things. We're still going to have an executive committee. We'll still have an executive
Sure.
meeting, I suspect, every meeting or almost every meeting, Todd.
Mhm.
Sure. Well, listen, it was my idea to study it, and I still remain in support of it. I think the fact that it will remain on the consent agenda and it can still be pulled if people want to have a conversation about it should provide people additional comfort. But so long as it's pretty clear what the rules are in terms of whether or not it gets put on the consent agenda or executive committee in terms of, when the sale has to close, is it at or above appraised value? All those kind of things intuitively makes sense to me. And I think, why don't you just bring a report to next committee meeting that just says, based on this, we think this will probably reduce the amount of stuff that goes to consent versus executive by 20% or whatever that number is. But I think Brian's gut is right based on just my own recollection of things we've reviewed. But I would still be in support of doing something to make the process a little bit more efficient. I can't think of a single smaller transaction in the year that I've been on it where an issue was raised and we altered it or turned it down. But that's, again, I've only been on the board a year. There may be others who have more of a different recollection than me.
I'm in agreement, Todd. This is Michael. And so are you wanting to table this until next month and look at those statistics, or do you want it just for informational purposes? Because I think I'm in agreement with the proposal. I don't see anything that concerns me since the issues will still be brought on the consent agenda.
Unless people want to wait, I'd be happy to go ahead and moving forward on this, and then just saying that we'll have an annual report that basically shows how many items, and we'll just know what our history is and we'll be informed.
Scott Rohrman moves to approve.
I'll second.
Motion is made, seconded, carried unanimously to approve item number 3. And for the record, that is as written as the staff has presented with the $75,000 de minimis policy. And we'll report back annually on how that turns out. So
Yeah, I'm sorry, Mark, we'll prepare a report and we'll put it on the docket, just kind of to provide you all with the information y'all were seeking. And we'll make the docket item broad enough so if the board then decides, let's raise it to 100 or let's drop it to 50 or whatever, the board
Okay.
can do that after we get the report. So we'll
Okay.
make sure we have that is the next docket item.
Thank you, Jeff.
Sounds good.
appreciate it. Next item on the agenda is item number 4.
Good morning, Robert Hatter with Energy Resources Division. Docket item number 4 is consideration and action on GLO contract 21-023-000-C341 for a natural gas management software. Currently, just as a little background, the General Land Office through the State Energy Marketing Program has 91 different natural gas customers, and we serve approximately 650 gas meters. Some of our customers include University of Texas at Austin here, the TDCJ locations, quite a few of those, and actually the natural gas in the building that I'm sitting in right now at the Capitol. Our current software is with Quorum to basically do the accounts receivable, accounts payable for the gas transactions. That current software expires August 31st, 2021. So we did an RFP to go out and see if there were any competitors or maybe a better system. The only respondent we had was Quorum, which is our existing system. So basically staff's asking for board approval to renew that contract as of the end of August of this year. Happy to answer any questions.
Yeah, I got a question. When you say meter, are these meters controlled by the state or are they operated by a third party?
The actual meters are operated by whatever the local distribution company is. We provide the gas and then we pay for the transport of that gas to the customers.
So this is interesting. So are you saying that GLO is taking gas in kind and going and selling it itself to the distribution companies?
In part, we do take some gas in kind. It's difficult since most of our natural gas is out in the Permian Basin where not a lot of our customers are. Really more often than that, even though we do take some gas in kind and transport it, more often than that, we buy gas on the open market, put an adder on it, and then sell it to the customers. And typically we can do that. It's a very competitive market, but you know, we can usually meet or beat the private sector, depending on the location.
Okay, this is interesting, guys. This is the first time I ever knew that you were in the open market trading natural gas, actually buying third-party gas and compete. I didn't know that was part of the agenda for GLO. Is it a fairly big group?
Currently I have a staff of 5 that manages that, and they do a pretty good job. A lot of them have experience in doing market trading, and so they're able to be competitive. We also get last look from any state agency that is above a certain amount of volume. So a lot of times we can beat our competitors' price. It's not a high margin business, but I think it was put in place, I believe, in 1983 as a way to provide a competitive option for natural gas for public retail customers. And we're not limited just to public retail customers, but that's the only ones we serve currently.
I think that's important to note that it is state resources we're providing primarily to state agencies, state funded universities, public school systems, that kind of the state serving the state through this program.
Okay, no, I didn't know that, guys. It's interesting. Okay. I motion to approve.
A second.
Motion is made, seconded, and carries unanimously to approve item number 4.
Thank you.
Thank you. Item number 5 through 8 will be an executive session. So the School Land Board will enter into executive session pursuant to Chapter 551, Subchapter D, Section 551.071 of the Texas Government Code for discussion and consideration regarding pending or contemplated litigation and/or settlement offers, or to seek to receive attorney advice or counsel related to items number 5 through 8 on the docket, and subsection 551.072 for discussions, consideration concerning the purchase, sale, lease, exchange, or value of real property related to items number 5 through 8 on the docket. Following the executive session, the board will reconvene in open session to complete the docket. If the visitors want to remain on the call, we will return back to the Zoom following executive session. Looks like I see Michael. There's Gil, Todd, Scott. Looks like we are good to go. The open session of the June 28, 2021 School Land Board meeting will resume with item number 5.
Good morning, Amber Long, Asset Management. Staff recommends approval of the sale of vacant land for the terms discussed in closed session as being in the best interest of the PSF. Any questions?
This is Michael. I move to approve.
This is Gail. I second.
Thank you. Motion is made, seconded, and carried unanimously to approve docket item number 5. Next item on the agenda is number 6.
Good morning, Amber Long, Asset Management. Staff recommends approval of the disposition of excess land for the terms discussed in a closed session. Any questions?
There are no questions. Is there a motion?
This is Michael. Move to approve.
Second.
This is Gail. I second.
All right, motion is made, seconded, and carried unanimously to approve docket item number 6.
Thank you.
Next on the agenda is number 7.
Good morning, David Wells with Asset Management. Staff recommends approval of docket item 7 for the terms discussed in executive session.
This is Todd Williams. I move to approve.
Gail. I second.
The motion is made, seconded, and carries unanimously to approve docket item number 7. Next item on the agenda is number 8.
Thank you, Mr. Chair and members. For the record, Rusty Martin, Chief Investment Officer. Approval of this agenda item would constitute your approval of an investment by the General Land Office on behalf of the Permanent School Fund in West Street Infrastructure Partners 4 LP. The IEC is recommending that Texclo invest $300 million on behalf of the PSF in WSIP 4. WSIP 4 is a newly created $4 billion global closed-end commingled private equity infrastructure fund. The general partner is a wholly owned subsidiary of the Goldman Sachs Group. Goldman's Merchant Banking Group will manage Fund 4 through its infrastructure investment group. The fund will focus primarily on making investments in societally critical assets in 4 key infrastructure subsectors. Those are transportation and logistics, energy transition and renewables, digital infrastructure, and other essential services. Our relationship with Goldman began in 2008, and currently we're invested, and we have $100 million committed to one of the funds that they manage. Investment management staff conducted due diligence and analysis on the proposed investment in Fund 4 through discussions with the Goldman Sachs team and the Townsend Group over the past few months. In addition, the Goldman Sachs team made a detailed presentation to the IEC on June 17th. In conjunction with this ongoing discussion, review, and analysis, investment management worked with Townsend and legal counsel to ensure that the investment fits within the framework of the Texclo PSF investment policy statement and is in the best interest of the Permanent School Fund. Therefore, I'm recommending that the School Land Board approve an investment of $300 million by Texclo in West Street Infrastructure Partners 4 LP. And also, as usual, I would like to note that the approval of this transaction is contingent upon investment management's completion of the negotiation and finalization of the legal documentation associated with the proposed investment in West Street Infrastructure Partners 4 LP. And I'm happy to answer any questions.
Any questions from the board?
No, this is Todd Williams. I will abstain from a vote on this matter.
This is Gail. I motion to approve.
Michael, I'll second.
All right, the motion is made, seconded with 1 abstention to approve item number 8. Next item on the agenda is number 9.
Thank you, Mr. Chair and members. Approval of this agenda item would constitute your approval of the release of funds from the Real Estate Special Fund account, which I'll refer to as the RESFA, to the Permanent School Fund liquid account for temporary investment by the State Board of Education until it's needed by Texclo to fund capital calls related to new and existing School Land Board investments in the RESFA. Just as a reminder to you, not in the last session, but the session before that, Texas State Legislature 86th regular session created legislation, the main purpose of which was to create the liquid account in order to provide for the temporary investment by SBOE of money in the RESPA committed by the school land board to new and existing investments awaiting capital calls by the school land board's external investment managers. The bill gives the SBOE the authority to invest the money in the liquid account in liquid assets, to keep any investment income or realized capital gains from those assets, and to use funds in the liquid account to pay for administrative costs associated with managing the liquid account. In conjunction with the creation of that account, school land board is required to adopt a resolution occasionally to temporarily release from the RESPA funds that are not required for the school land board's anticipated cash needs for the 90-day period following the date of the meeting. If we should subsequently need that money, the SBOE is required to release an amount requested by school land board within 5 business days of the request. On page 2 of your memo, you can see a history of the releases beginning September 3rd, 2019. And you can see that the initial release was $3.9 billion. There have been various transfers to the liquid account and various transfers back from the liquid account. So the total amount that we have net there now at this time is $3.78 billion. About $2.7 billion of that amount represents capital that's already been committed to specific text flow investments, but has not yet been called by the associated managers. Of that $3.78 billion, SBOE has now invested about $2.4 billion of it, and that's in a diversified portfolio of equity and fixed income securities. Currently, the market value of the equities is around $800 million. Market value of the fixed income securities is about $1.6 billion, and the remainder is held in cash at the state treasury. Since inception through May 31st of this year, SBOE indicates that that fund has returned 3.34%, which is substantially higher than the current yield on the state treasury cash, which is about 0.32% when this memo was written. As provided by the bill that originally enacted this legislation, the SBOE has so far released about $128 million of income and realized gains from the liquid account to the PSF. There's a table on page 2 that shows our estimate of cash for the next 90-day period. We expect our cash needs to be $351 million. There's currently about $713 million in the RESPA at the state treasury. We estimate $349 million will be deposited into the RESPA from oil and gas royalties and bonus and investment earnings during the period. Thus, we're estimating that the balance at the end of the next 90-day period will be approximately $711 million. Given the recent market value of the investment portfolio, it's $4.3 billion, and the board's target for cash is 5%. That gives us a cash target of about $226 million, which means the cash projected balance at the treasury will exceed the board's cash target by about $485 million. Therefore, I'm recommending that that SLB release $400 million from the RESPA to the liquid account and retain the remainder to meet anticipated cash needs during the period. We'll, of course, continue to monitor and prepare and present new cash needs assessments on a periodic basis. Therefore, in accordance with the requirements of the Natural Resources Code, I'm recommending that you release $400 million from the RESPA to the liquid account during the period June 28th through 30th. We'll probably get the transfer done tomorrow, the 29th. And that would be for investment by SBOE in accordance with the provisions of the Natural Resources Code related to the liquid account. And then we would retain the amount remaining in the RESPA to meet our anticipated cash needs. This is a relatively ministerial act. I'm happy to answer any questions.
Rusty, would you mind restating again what percent of the RESPA is actually invested in fixed income and public equities versus today versus cash?
The liquid account,
Yes, sir.
yeah, they have 2.4 billion invested out of the 3.8. 800 of that is equities. These are market values. 800 and 1.6 is fixed income.
And so if I remember right, that they were trying to get to a 40-40-20 with 40% equity, 40% fixed income and 20% cash
Yeah,
target.
yeah, this is about 30% equities here.
What's our ability to influence the speed at which they get to that target, given that they've had the money since September of 2019? Do we have any ability to do that?
I would defer to the chairman and the general counsel on that matter.
I'm not sure we have any authority under that bill. We released the amount, and the intent behind that bill is they were going to invest all of this in liquid account to get a higher return. And I don't think we can control their time frame on this.
Okay.
Yeah.
I just want to make sure it's totally up to the SBOE. Okay, that's all I needed to know.
It is statutorily, Todd. It completely is controlled by them.
Okay, thank you.
And what is, since 2019, what has their performance been like?
Since inception through the end of May, and I'm quoting their metrics, okay? So I have not verified this. They tell me that they have returned 3.34%. The state treasury yield right now is about 0.32%. So they've performed about, well, of course, the treasury yield has fluctuated quite a bit since then. So I can't say with any conviction that they've done 300 basis points better, but they've done somewhere between probably 100 to 300 basis points better over that period than that it would have done in the state treasury.
Thank you.
Yes, sir.
And do you recall what were the initial projections they were saying when we initially talked about the liquid funds account, how much additional revenue that would provide on an annual basis?
Well, originally when they were talking to the legislature, we were talking about a liquid account about this size, 4 billion in round terms is what they were talking about. And they suggested that they could earn 500 basis points in incremental yield above what the Treasury was earning. At the time, the Treasury was earning somewhere around 1.5% to 2%. So what they said was, look, our portfolio, if we're invested in our normal portfolio, it generates 7% on average. So they were saying they could beat the Treasury by 500 basis points, which would translate into $200 million per year in incremental income above that the Treasury would earn.
Okay. So 200 million annually. So we haven't hit that.
No.
No.
No. They would have, well, first of all, as Todd brought up, they haven't reached the sort of diversification that would simulate what their overall portfolio is invested in. And frankly, they really never would, because they have to maintain some degree of liquidity in this fund that they wouldn't have to obtain in the regular portfolio. So 500 basis points was probably pretty optimistic.
Okay. Any other questions from the board? If not, I will entertain a motion to approve.
This Michael, move to approve.
This is Gil, I second.
Motion is made, seconded, and carries unanimously to approve item number 9. Final item on the agenda is number 10.
Thank you, Mr. Chairman, members. Again, Rusty Martin, Chief Investment Officer. This is a non-voting item. I'm pleased to present you with a quarterly investment report for the period ended December 31, 2020 for the permanent school fund investment portfolio. The performance measurement calculations and the statistical data that are presented were prepared by State Street Bank and its Private Edge Group. They are the custodial accounting and performance measurement agents for the portfolio. Beginning with the executive summary, it's page 1 of the report. Fourth quarter U.S. GDP increased at an annual rate of 4.3%. That was following, of course, a very dramatic increase of 33.4% for the third quarter. That increase in fourth quarter GDP reflected both the continued economic recovery from the sharp declines earlier in the year and the imposition of new restrictions and closures that were implemented in some parts of the country due to the ongoing impact of the COVID-19 pandemic. The unemployment rate ended the quarter at 6.7%. That was down from 7.8% at the end of the third quarter, and again reflects continuing efforts to mitigate the impact of the pandemic. As far as the Fed is concerned, if you'll recall, in March of last year, they took a series of actions that effectively reduced their target Fed funds rate down to 0 to 0.25%. And they indicated that they would maintain that target rate range until labor market conditions have reached levels consistent with their assessment of maximum employment, and inflation had risen to 2% and is on track to moderately exceed 2% for some time. They indicated that once again at their December 2020 meeting would be their goal. In addition, they reaffirmed the continuation of the balance sheet normalization program that they had launched in October 2017. They also again stated that they would continue monitoring the implications of incoming information for the economic outlook, including public health information and global developments, and they would use tools as appropriate to support the economy. Also, they reaffirmed that they would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of their goals. As far as the real estate market is concerned, the core U.S. commercial real estate market, which is measured by the unlevered NPI or NCREIF property index, returned 1.15% for the quarter, ended December 31st. Its trailing one-year return was 1.61%. The increase in return was once again attributed almost exclusively to the very strong performance of industrial warehouse properties. Although overall transaction flow did increase dramatically during the period to 264 sales, that was well above the 50 sales executed during the previous quarter and a typical average of 100 to 200 sales per quarter. So many more transactions getting done, which is good news. The fourth quarter gross returns for each of the individual sectors were hotels were down 3.31%, retail was down 1.24%, apartment was up just under 1% at 0.99%, office was up about 0.5% at 0.48%, and industrial continues its torrid advance. It was up a whopping 4.68% for the quarter. As far as the energy markets are concerned, WTI spot oil averaged about $42.52 a barrel during the quarter. It ended the quarter at $48.35 a barrel. That was a 21% increase from third quarter ending price, but it was still down about 20% compared to 2019 year-end prices. The positive price movement late in the year surprised a lot of analysts, given that crude oil prices went negative and volatility surged to record highs during the year due to the pandemic. However, global oil demand did bottom in April 2020 at about 80 million barrels per day, and it's since recovered to around 95 million barrels per day. So it's a strong recovery in a relatively short period of time. Subsequent to the end of the fourth quarter, oil prices have continued improving. supported by supply cuts, industry underinvestment, and continuing demand recovery. Many analysts believe that demand is going to continue to be healthy, and they're predicting that total demand by the end of next year could exceed about 100 million barrels per day. As far as gas is concerned, Henry Hub spot prices averaged $2.52 per million BTUs during the fourth quarter, ended the quarter at $2.36 per million BTUs, which was a 42% increase from third quarter ending price and a 13% increase over 2019 year-end prices. Market indicators for natural gas prices remain bullish. Most analysts expect relative strong prices during 2021. This bullish sentiment is driven primarily by new LNG projects that are coming online over the next 5 years, a substantial withdrawal during the 2020-21 winter season, and natural production decline rates and lack of capital investment. Most analysts believe gas will probably hover in the 3 to 350 per million BTU range for most of the year. Turning to the performance measurement metrics, which begin on page 2 of the report. Total net asset value at the end of the year was $4.523 billion. 95% of that was the value of the portfolio, and 5% was cash equivalent investments at State Treasury. As far as performance is concerned, portfolio had a very strong quarter, up 3.55% versus 1.12% on the benchmark. The real estate sector of the portfolio was up 1.94%. Infrastructure was up 3.61%, and energy was up a very, very healthy 5.01% during the quarter. As far as longer term returns are concerned, 1 year return, we're still negative due to the huge downward movements in energy and the volatility associated with that over the past year. We're still a minus 7.96% versus a positive 3.7% on the benchmark for the 1 year return. 1 year sector returns were energy down 26%, infrastructure down 3%, real estate up 2.5%. On a 3 year basis, we were at 2.08 versus 5.25 on the benchmark. But on the 5 and 10 year, we continue to handily outperform benchmarks. 5 year returns 8.26% versus 5.74 on the benchmark, and 10 year returns 12.19% versus 8.20 on the benchmark. As far as policy returns are concerned, as you know, the policy return is a 5 year net of fees return. On that basis, the portfolio performed at a 6.17% versus 3.39 on the benchmark. So a significant outperformance as far as policy return of about 278 basis points. At the end of the year, about 28% of our existing capital commitments remained unfunded, 26% of real estate, 28% of infrastructure, and 30% of energy. There were no new capital commitments during the fourth quarter, and subsequent to the fourth quarter, there also were no new capital commitments. As far as allocations are concerned, page 7 and 8 of the report, on a purely invested basis, which we use NAV to measure, the allocation to real estate at the end of the quarter was 28% versus a target of 33%. Infrastructure was at 41% versus a target of 32%. Energy was at 31% versus a target of 35%. As you know, these allocations reflected extreme levels of volatility in the energy markets at the time. And over time, these allocations are going to become more in line with our policy allocation targets as we make new capital commitments in the various sectors and as more of the existing unfunded capital commitments become funded. I'd also point out, just to jog your memory, that in April of this year, you approved new allocation targets, which were adopted by the board, of real estate 33%, infrastructure 36%, and energy 31%. Those new targets, because they were adopted in April, will not show up as targets in the quarterly investment reports until the June 30 quarter. If you look on page 8, the allocations on an invested plus unfunded commitments basis, a little bit different. Real estate was 27%, infrastructure was 39%, and energy was 34%. As far as geographic diversification is concerned, which is on page 11, 12 of the report, we're about 95% allocated to the US compared to a target of 85%, and we're 5% allocated international compared to a 15% target. But again, in April of this year, you did change those allocation targets, also reducing the US target to 90% and increasing the international target 10%. Those again will be reflected as targets in the June 30 report. As far as manager exposure, it's on page 13 to 14 of the report. We're well diversified across a platform of 25 different managers. Our policy statement limits the exposure to any one manager to no more than 20% of the total portfolio. We measure that on an NAV basis. At the end of the year, the top 5 highest exposures were InCap Energy at 12.85%, USAA Equity Advisors at 9.19%, Macquarie Infrastructure Partners at 8.7%, InCap Flatrock Midstream at 7.75%, and Clarion at 5.68%, all of them well below the 20% threshold. On the co-investment vehicles are grouped by manager and presented separately. The highest grouped co-investment exposures at the end of the period were InCap Flatrock Midstream at 8.17%. That was followed by First Reserve at 5.11 and BlackRock at 4.68. This is a non-voting item. There's a conclusion of my report. I'm happy to answer any questions you may have.
Thank you, Rusty. Excellent report. Any questions from the board?
I don't have any question, but I was looking at WTI spot crude. I think it's around $73 today, which is about 50% above where it ended the quarter that Rusty just reported on. So that's positive, obviously, for the portfolio.
Very positive.
All right, seeing no questions, this is a non-voting item. There being no further business before the School Land Board, the meeting is adjourned. Thank you all.
Thank you, everybody.
See you, everybody.
Thank you all. Bye.